Okay, there.
Okay.
Okay.
Hi.
So, hi everyone. Good afternoon. We have Monet with Family Houston. She will be going over creating new savings goals today.
Hi everyone. So I'm a financial coach with Family Houston, and pretty much what we do is we work with our clients on creating different personal financial goals. So today we're going to really focus on how to create new savings goals, as far as like creating new saving habits, because we know, right now with the whole stay-at-home order, everyone might be saving on certain expenses that they would normally have spent money on throughout the month. Um, so I'm gonna turn my camera off and just have my audio on. And then at the end of the presentation, we're gonna do like a Q&A where everyone can ask a few questions. So give me one moment and then I'm gonna get started. Okay. So just to quickly go over the learning objectives today. First, we're going to talk about how to use SMART goals to start a savings goal. Then I'm going to go over defining paying yourself first, identifying strategies on how to pay yourself first and start developing an emergency fund. And then also paying yourself first can go towards any savings goals. And then defining emergency savings and identifying ways to maintain funds. And then I'm going to go over just a few financial products as far as like online savings accounts that can maximize your savings as well as build credit. So one of my favorite quotes is to do something today that your future self would thank you for. And what I mean by this quote is when you're thinking about things that you want to accomplish in the future, what are small things that you can sacrifice today that would give you a better outcome in the future so your future self can be happy? So, for example, just thinking of an emergency fund. If you didn't have that fund and in the future, your future self have a car accident, then it's like you're going through the stress of figuring out, okay, well, how am I going to pay to repair my car? Or how am I going to pay my insurance deductible? Whatever cost that you're going to have to figure out at that point. But just say, for instance, if today you decided to use your stimulus money because that was extra income to start an emergency fund. So then in the future, if your future self had that accident, then you have that money to go ahead and cover what the deductible cost would be, and you wouldn't be stressed. Same thing if you wanted to go on a vacation, if you sacrifice some expenses today, then your future self can be sitting on a beach whenever they allow us to travel again, of course, but your future self can be enjoying yourself on a trip because you sacrifice some expenses today to go towards that saving goal. And then in respect to like long-term savings, such as retirement, is sacrificing a portion of your income today so in the future you don't have to worry about working past your retirement age. So let's get into SMART goals. Whenever it comes to creating any personal goals, regardless if it's a savings goal, if it's a career goal, education goal, it's good to kind of follow the rules of SMART goals, which is, as you can see, is an acronym, and the S in SMART is, of course, is making sure that the goal is specific. So that's clearly defining out what your goals are, and even and even like what your action steps would be to accomplish that goal. So when defining a savings goal, it can be, I want to save $2,000 in 12 months, and that $2,000 will be an emergency fund, or that $2,000 is gonna be a vacation, or maybe you want to buy something for yourself. So making it specific is giving yourself an actual dollar amount that you want to save. Um, and then where are you going to put that savings? So defining where that savings is going to be. Is it going to be like what bank is it going to be at? And how often are you going to deposit into that bank account to go towards that goal? So it could be breaking down the total goal amount into monthly payments or weekly payments to yourself, and being able to track how often you're depositing money into your account. Um, and then, what is the purpose of this savings when you're defining that goal? What is the purpose of your saving? Like I said, it can be an emergency fund, it can be for travel, it can be for school, it can be towards buying a home, maybe buying something special for yourself. So always give your money a purpose so you can know what you're looking forward to. And then, like I said, the next one is measurable. So determining how much you're going to put into your savings account each month, each week, and actually putting that money in there, is you're giving yourself a way to measure how close you're getting to the end goal. Um, so being able to see that the saving balance increase is allowing you to measure that goal and seeing how close you are to the total amount that you want to save. And then, is this goal attainable? Um, Sometimes we make goals that might be too challenging for us, so we tend to not accomplish those goals, and it can add extra stress on us. So, using your budget to determine what is an attainable savings that fits into your budget plan, just making sure that it's something that you can easily accomplish. And then also, is it relevant? So creating saving goals that's relevant to what it is that you're wanting to do, and then give yourself a deadline. So always give yourself an actual date that you want to stop that goal. So maybe you want to save a certain dollar amount for 12 months. So 12 months from the date that you start saving would be your stopping date. And then on that stopping date, you can look back at whether or not you accomplished that goal. If you did accomplish that goal, then it's time to celebrate and then do whatever the purpose of that savings was for. If you did not accomplish that goal, then it's taking the time to reflect on why weren't you able to accomplish that goal, and then starting the goal over and giving yourself a new deadline to accomplish the savings goal. Okay, so let's talk about when do we save. So I'm gonna get into paying yourself first. So currently, a lot of people, what they do is they pay bills first, and then they spend what's left, and then after they spend what's left, before their next paycheck come in, then they save. Um, So with the issue with that is you're only saving what's left over. So just say, for instance, if there's nothing left over, then you won't have the ability to save. And then it's like you're determining the amount you save based on after you spent all of your other money for the month. But what we should do to save is we should save first. So if you have a dollar amount that you want to save per month, you should save that amount first, then pay your bills. Once all your bills and important expenses are paid, then if you have extra spending that you want to do, then you spend what's left. So what happens is if you save first, you're literally building a good habit of paying yourself first. And the definition is that of that is paying yourself first gets you used to saving regularly. You learn to prioritize your savings, which become an essential part of your finances and not just a nice to have. So a lot of people say, oh, it'd be nice to have a savings or it'd be nice to have an emergency fund. But, you know, it can be doable if you're looking at your budget and you're looking at some of the unnecessary spending you might be doing. So when you prioritize yourself over something, for example, eating out or maybe buying, spending too much shopping, when you prioritize yourself over these other companies, then you're going to have that, you're going to meet those goals because that money is going out of your account first to your savings to pay yourself first. And then all of your other expenses is going to be based on what you have left over after you put money into your savings goal. So, what are good ways to start establishing that habit of paying yourself first? And these tips, it kind of makes it easy for us to start that saving habit and stick to it. So, in order to pay yourself first, the easiest way is to set up a direct deposit from your paycheck to your savings. A lot of companies allow you to set up multiple direct deposits. So before your paycheck hits your checking account, then you're going to set up a direct deposit to have a little bit of your pay go to a savings account and then the remaining amount go to your checking account. And from what is going into your checking account is what you're going to use to determine how much you spend on your other expenses. The next option is if you're unable to do the direct deposit from your paycheck, then set up an automatic transfer from checking to savings and set that automatic transfer on the same day of your pay date. So as soon as your pay hits your checking account, your automatic transfer from your save to your savings automatically comes out before you start spending that money on other expenses. Next thing is set up a savings account that's out of sight, out of mind. So it's good to have a savings account connected to your checking at your current bank just for any quick emergencies or overdraft protection. But for saving goals, you should have a different bank account that is inconvenient for you to get to. So it can be a credit union or you can try an online bank. And what happens is if it's out of sight, out of mind, it's like you know it's there, but you can't see it on a regular basis. So you're not going to pinch off of it. But if you have it connected to your checking account, and every time you look at your bank and you see that savings, then you're more inclined to pinch off of it. It's easy for you to transfer back and forth. So just for example, if you're in the store shopping and you don't see enough in your checking account and you go look at your bank and you see that savings, then you can say, oh, okay, well, I can afford this extra t-shirt. I'll just transfer the money from my savings account. And then in seconds, you have that money into your checking. But if you have your savings set in a different bank account that's out of sight, out of mind, in order for you to do that impulse buy, you'll have to wait like 3 to 4 days for that money to transfer to your checking account. So that gives you 3 to 4 days to decide whether or not you want to make that purchase. So that's why it's important to put your saving goals into a separate account. The next thing is increase savings amount when your income increases. So whenever you get raises, you should increase what you're saving on a monthly basis versus increasing your expenses. And this also goes into like your long-term retirement savings. So if you're saving a certain percentage of your income into a retirement plan, anytime you get a raise, that percentage of savings towards your retirement should increase a little bit as well. The same thing as if you have certain savings goals, as you get an increase in income, since your expenses are already based on that lower income, instead of increasing your expenses, just go ahead and increase the savings, and making sure that you have money to cover those different goals that you have set for yourself. And then lastly is saving extra income. So if you receive bonuses, every year we get a tax refund. If you have a second job, or you have hobbies that you turned into a second job, or you get birthday gifts. And then, recently a lot of us, we received stimulus money because of COVID-19. So one of the things to do is take that extra income and put that into your savings account. Um, and that can be used towards, like I said, savings goals for the future, as well as making sure that you have an emergency fund. And let me know if I'm going too fast. Does everything look okay? I just want to make sure I'm not going too fast.
Looks good, Monet.
Okay. So let's talk about what to do with the COVID-19 stimulus check. So for some of us that maintained our regular pay through the crisis, but we received the stimulus check. So in reality, that was extra income for us. So during this time, if you didn't have to use that money towards bills or to cover any of your regular expenses, like what are things that you can do with the stimulus check? So one of the biggest thing is, if you did not have a small emergency fund, that is a good amount to get started with a small emergency fund, and just holding on to that and allowing it to build a little bit of interest. So, in the future, if you do have emergencies, you can have that money already saved to put towards those emergency expenses. Or maybe if it's one day, hopefully we'll be able to travel again. Then you can use it towards a nice vacation for yourself. Um, or like I said, just hold on to it. There's also ideas of maybe investing to grow that money a little bit, or even putting it towards a retirement fund and getting started with a retirement fund or education fund for your kids. So those are just ways to, instead of going out and spending that money, finding ways to use it for future savings goals. Or like I said, if you want to buy a house in the future, you can put this money away towards your down payment or towards the expenses that you would have to purchase a home. So I'm going to talk about paying yourself first into action. So getting started with your savings goal is to first start off with knowing your budget. So taking the time to sit down and create a detailed budget by tracking your spending for 1 month, and then creating a spending plan based on your budget that includes paying yourself first. So think of paying yourself first as any other bill that you have, and making sure that when you create that spending plan that you're indicating the amount that you want to save per month. Next, once you determine what you're going to save per month, then open a high interest online savings account. So there's different online savings accounts that offer a higher interest rate than your brick and mortar banks. You can use Bankrate or NerdWallet to look at different options and see what different online savings accounts are offering for interest rates. And then look for the ones that offer a zero balance minimum to get started. And that's just so you don't run the risk of having to pay monthly fees. Next, once you have the account that you want your savings goals to go to, then setting up that direct deposit either through your employer or setting up an automatic transfer for the day of the month that you want that money to be transferred into your account. So again, think of paying yourself first as paying any other bills. Give yourself a due date that you're going to have for that money to go from your checking to your savings, or like I said, using your payday as the due date to pay yourself first. So either it's coming from your direct deposit or you setting up that automatic transfer on your payday to transfer that money into your savings account. So just quickly to talk about emergency funds. So just to define an emergency fund is a separate savings or bank account used to cover or offset the expense of an unforeseen situation. So you have a small savings, which is 1,000 to 2,000. So that's to cover those small emergencies, such as a car repair or medical emergencies. And then we have the large savings for a loss or reduction in income, whereas that's 3 to 6 months of your expenses. Um, so when you do have an emergency fund, you have to set rules for what expenses are considered an emergency. So your favorite store having a random sale that everything is 70% off is not an emergency. So that should, so you shouldn't dip into emergency savings to cover some end of year sale. So emergency should be, like I said, maybe something needs to be repaired on the car. Maybe you had to go to the doctor or the emergency room for whatever reason. So you should set a list of rules as to what are considered emergencies. Um, and then having this emergency savings is going to reduce your likelihood of needing credit and in increasing credit card balances or needing to apply for loans to cover these expenses. So how do you maintain your emergency fund? So your emergency funds should be revolving. So every time you use money from that fund, you should pay yourself back. So for example, if you needed to use $100 from that emergency fund, so your emergency fund went from 1,000 to 900. So the next time you have $100, you should put that $100 back into your emergency fund and keep your emergency fund at a certain level to make sure that it's always there to cover and the next emergency. So it's almost similar to a credit card, revolving like a credit card, but you're paying yourself back. So again, your emergency fund should be revolving. So anytime you use money from that fund, you should always pay yourself back. So earlier I spoke about different options for finding ways to maximize your savings, and also um, having your savings account out of sight, out of mind. Um, some convenient options that you can find online are Capital is actually a mobile saving app that you can download on your phone. And what Capital does is it sets up these rules to help you save money. So the rule might be if you heard of 52 weeks of savings challenge, they have a rule where every week it takes money out and put into your savings account based on the 52 weeks of savings. So how the 52 weeks of savings work is each week a dollar amount goes into your saving based on what that week is. So if it's week 1, it would be $1. Week 2 would be $2. Week 3 would be $3 on up to 52 weeks. So Capital, what they do is they do that automatically for you. Also, they do a roundup where if you purchase something, you can have the difference of $1 go into your Capital account. Also, if you say that you want to spend less money on groceries and you shop at the same store every week, anytime you spend less on your grocery bill, then that difference goes into your savings account. So Capital is a great way to kind of set up some automatic transfers from your checking account. I used it 2 years in a row to save for a vacation, and I did the 52 weeks of savings, and I also did the roundup rule, and ended up exceeding my actual savings goal for the vacation and being able to have cash money. So it's a good app. There is a monthly fee for that one. I think it's the minimum fee is $3 a month to use it. But it's a good option to kind of make sure that you're saving money because it automates everything for you. Smarty Pig is an online bank that's easy to set up, and what Smarty Pig does is you can have multiple accounts under one. So each account can be a different goal. So you can have one account for vacation, one for emergency, one for to purchase a home, if you're saving for a wedding, if you're saving for furniture. So you can have multiple saving goals under one account. And it also shows you your progress um, towards the total amount that you want to save. And so you can set up deadlines as to when you want your saving goals to be met. And as you add money into those different saving goals, your little piggy bank grows at the same time. So it's a little cute to watch. Your little piggy bank gets bigger and to see how much closer you're getting to your actual goal. Ally Bank is it's just another online bank. And the reason why I put them on here because they typically have higher interest rates that you can earn on your savings account than most of your brick and mortar banks. And I've heard a lot of good things about Ally, so it's just an online bank that I recommend because I heard a lot of good things about them. And again, like on an earlier slide, if you don't want to use any of these online options, you can always do some research through NerdWallet to look at different options for online banks that might offer higher interest rates than your traditional brick and mortar bank. So another means of savings that I want to tell you guys about that can also help you build credit is called self-lender. So with self-lender is similar to a CD account. So what happens is you open the account and you set a term of 12 to 24 months, and in each month you're making monthly payments to yourself. And as you're making monthly payments, those payments are going into a CD account that you cannot touch until your payment term in the 12 to 24 months. And as you are making those payments to yourself into the self-lender account, is also reporting to your credit report. So essentially, you're saving as well as building your credit at the same time, because those payments are being reported to the credit bureau as on-time payments. You have different options. The lowest is $25 a month, and it reports to all 3 credit bureaus. So a few takeaways is create a savings goal and stick to it. So whenever you create your savings goal, just make sure that it's something that you prioritize, and you make sacrifices and stick to completing that goal. Spending less money does not equal savings. So right now, we're all, a lot of us are working from home. So that means we're spending less on driving, we're spending less on eating out, we're spending less on a lot of things right now. But that doesn't mean that you're actually saving money. Because even though you might be spending less on some expenses, you still have the opportunity to spend on other things. So in order to save, you have to actually go through the process of putting that money into a savings account. Next, automate your savings. Take advantage of paycheck direct deposits. Keep your savings at a bank instead of at home. A lot of people do have savings where they save cash money at home. The only downside to that is you're not earning interest. So keeping your money in a bank account would allow you to earn some money on top of what you put in. Keep your savings, especially emergency funds, out of sight, out of mind, so you don't run the risk of pinching off of it. And then always save extra income you receive. So I just want to talk about what financial coaching is and how Family Houston is here to help. One of the things we do is to help our clients discover how to make their hard-earned money go a lot further. So we work with you creating budget plans, finding ways to get out of debt by creating debt management plans. We can review your credit history for free to discuss ways of increasing your credit score. Of course, we hold you accountable to sticking to any saving goals, so allowing you to build your savings, because we're here to be your accountability buddy when it comes to making sure that you're sticking to your savings goal. And if you're looking to buy a car or a house and you're needing help with that, then we're here to help you, and it's all for free. This is my contact information. You can contact Family Houston to schedule appointments with any of our financial coaches. And then my direct line is here. So if you have any questions or if you want to schedule an appointment with me, you can call me to schedule an appointment, or you can send an email. Do we, I'm gonna put my camera back on. Do we have any questions? I'm gonna,
As of right now, there isn't any questions in the chat.
okay.
If you guys have any questions, you can unmute your speaker and you can ask Monet whatever you need.
Yes, and then also if you have any tricks that you've been doing to save, you can also let us know as well.
Hey, Monet, thank you for all the information. What comments do you have about money market versus savings? Any advantage one over the other for emergency? Thank you.
So with money market accounts, usually a money market account requires a higher balance, minimum balance that you have to have in that account. And usually those accounts have higher interest rates as well. So just say, for instance, if you're saving 3 to 6 months of expenses, that might put you at the balance that's needed to have a money market account. And like I said, a money market account would offer you a higher interest rate as well. But you do have to maintain that balance in order to avoid any fees. So it's a good option because of the higher interest rates they might offer.
Okay, so I guess better to start with a regular savings, high yield, like you said, and maybe eventually once I get to those 3-4 months, like you said, of emergency funds, convert it to money market if I'm able to maintain it. The hardest part is always the maintaining, so I like the tip that you gave us.
Yeah, so look at what the minimal balance are for the money market accounts and what interest rates they offer, and then that can give you an actual saving goal as to where you need to be to transfer to that type of account. But also, like I said, use NerdWallet to look at the different savings account options that have zero minimum balances, and see which one offers the highest interest rate. And then that's the one you can use to start your emergency fund in.
Thank you, Jorge.
And
Anybody else have any more questions?
I was going to tell George also, just remember when maintaining that account, just anytime you use the money, just make sure you put that money back. And make sure, you, like I said, treat it like any other bill. Prioritize yourself the same way you will prioritize any other bill that you pay each month.
Yeah, I just have to get systematic. And, you know, sometimes I put it under the mattress and then it goes away and never replace it.
I know you have to be careful with other people in your household too, because I know like my dad used to keep a shoebox of coins under the bed, and we used to pinch off of it all the time. So when I used to work at the bank, I actually made him roll all his coins and put it into an account. Because we kept taking money out of it, we kept taking his change. And so I forgot, he had like maybe like $300 to $400 in change that just was sitting under his bed.
Wow.
So, you know, I made him put that into an account. Do we have any other questions? I can't, how do I don't know how to see the chat.
Let me see if I can share it. I'm not quite sure if I can, but let me try.
Maybe I have to turn my,
I don't think there's a way for me to share it, but there's no questions in the chat right now.
okay.
Let me see.
You know, maybe I can't see the chat because.
Yeah, let me see. Yeah, you should be able to see it, Monet.
Okay, I see it now.
Okay.
It says chat is disabled. I don't know if it's disabled for me
Okay.
or if it's disabled for everyone. Okay.
Okay,
good.
how about now?
Yes, so I can, it's not saying that anymore and I can type now.
Okay, good.
Is there anything that I didn't cover that you all would like to hear about pertaining to savings? Any questions that you have about certain types of savings that I didn't cover today? 'Cause I know I kind of focus more so on building the habit of saving.
So a question that comes to mind is there any way to get a formula, or how do you put like an amount? Like you said, you want to do specific. What is the best recommendation on what is it that you need to cover? Is it all your regular expenses on a budget in case you lose your job, or any something like that? Any recommendation of what should we looking at? I like the amount that you said, 2,000 in 12 months, but I don't know. Again, once you get that, again, if it's an emergency, I'm not going to use it for a vacation, but that's another type of savings. But for
Yeah.
emergency, what do you see out there based on your experience?
So for the smaller emergencies, so these are things that probably are less than $500. That's why I said $1,000 to $2,000, because you more so have a small emergency versus losing a job. And then the 3 to 6 months, it can take a while to build up, unless you just so happen to get a huge lump sum of money. So to determine what that saving goal will look like is to really sit down and do an accurate budget. So if you're using a checking account to pay for everything, then you're going to sit down with your transaction history and go line by line and put everything into categories to determine what your actual expenses are. And then start with prioritizing your expenses. So start with looking at what are the critical expenses that you're going to need to cover each month. So how much are you paying on your rent and mortgage? How much are your utilities? If you have critical medicines, how much does that cost? Also, like with obligations, what are those obligation payments? So like car loans, personal loans, student loans, credit card payments that you're making. And then what are you spending for your daily living? So food, your cell phone. So with your transaction history, you're gonna be able to see accurately how much you're spending. Then when you put that into a budget spreadsheet, you'll see what your total spending is for each month compared to your income. And with that, you can start building that savings goal of, okay, well, maybe you get paid 4,000 a month and you spend 3,000. So you're gonna set your that saving goal based on, okay, what's 3 times 9? I mean, 3 times 3 is 9. I'm sorry, so that's 9,000 that you would need to save to cover your monthly expenses. So that's a great way to kind of determine what that goal would be, is starting with creating an accurate budget. And then once you have that accurate budget and you know what your spending is each month and what that total is, and then you can start looking at, okay, well, what do I need to sacrifice in this budget and I could take that money and put towards my savings goal. So the first thing we could probably start with is like eating out. So that's sometimes the easiest. If you eat out a lot, that's sometimes the easiest goal to reduce. So any of those expenses that vary throughout the month are the ones you're going to start with. How can you reduce those expenses and then put that money into your savings? And then you can look at your bills like, okay, well, which companies can I contact and see, can I lower my utility bill? Can I lower my internet bill? Can I lower my car insurance? And when you lower those bills, so whatever amount they lower it by, so just say they lower your utility by $30 a month. So now you have $30 more to spend. So what are you going to do with that $30? So you have to give that money purpose, and the purpose could be, okay, well, that $30 is going to go to my savings, or that $30 can go to buying a shirt. So it's like you have to give purpose to that money. And that's why I said anytime that you spend less and you have a savings goal, that purpose should be, let me take that money and put it into my savings account right away. And I know like right now we're working from home. So if you're a person that always bought breakfast on your way to work, and now you're not leaving to go to work, so you have that extra money in your checking account because you're not buying breakfast every morning. So how about every morning you take the money you would have spent on breakfast and put that into your savings account? And then that's going to form that habit, because now you're going to be in the habit of putting that extra money into your savings. So then it becomes automatic, and you're going to see that savings account start to go up.
Perfect. Appreciate it.
You're welcome. So we have about 8 more minutes.
I gotta go, but I got a bunch of notes. Thank you, Monet.
Thank you, Jorge.
Yes, and then George, if you need help on those savings goals, you can always reach out to us. If you need an accountability person, you can always reach out to our financial coaches for help.
Yeah.
Thank you, Jorge.
With that first name, I probably do it. Monet.
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 When I was at the bank, they used to call me Money.
Money, yeah. Well,
Yeah.
either I call you or I'll call you Dad.
Oh, yeah. Or my mom. My mom is very, very good at savings as well. So that's it got instilled in us when we were kids.
Fantastic.
Yes.
Well, have a good weekend, all.
Thank you.
You
Have a good
too.
weekend. Does anybody else have any more questions? I think we just got someone who just joined the group, Estella Walters and Sarah W. They just joined a while ago, so I don't know if they might have any questions.
Do you think they might be joining for the next for Brenda's presentation?
Possibly. Let me see. Questions.
And then I can stop sharing this right now.
There you go.
On the Spanish meeting, are we gonna continue or are we gonna log out and come back in?
I'm not sure.
Let me see.
I know Brenda said she was gonna come back in at 1.
Okay.
I can text her and
There
see.
you go.
Hello, Estela.
Hi.
Are you here for the Spanish financial workshop?
I can do either.
Okay,
I can
the
do
Eng-
either. So since
The
I
English
came
one
in
is
late,
just ending, actually.
okay, then I can.
Okay, yeah. The Spanish one will start in just a few minutes. But I think we can probably log back out and then log back in. That way Brenda can
Okay.
join us.
Okay.
Okay.
All right.
Okay.
Thank you.
Thank you guys, and thank you
I'll see you.
everyone.
Okay, I'll see you in a little bit. Okay.
All right, bye.
Bye.